Hello and welcome, investors. This is our segment of National Investing Day to cover how to vet stocks for long-term investing. Now, I am one of your hosts. My name is Rachel Deschelle. I am a chartered market technician and certified financial planner. I work within the trading and derivatives Schwab coaching group, who we basically put out webcasts all day, every day here on this channel, this Trader Talk Schwab coaching channel, to teach clients a little bit more about technical analysis, trading, and derivatives. And you can follow me on X. I'll post a lot of charts and commentary there. And I am joined today also by my friend and colleague, Casey McCurdy.
Hi, Rachel. How's it going?
It is going great today. How are you doing?
Wonderful. I'm excited to be here.
Awesome. Well, Casey, why don't you tell the folks a little bit about your role here at Schwab and where the folks could possibly find you here?
Rachel, I'm Chief Portfolio Strategist for Schwab Wealth Advisory. I, as you mentioned, have a certification called the Chartered Financial Analyst designation. I have been at Schwab for 15 years now, holding positions in research analysis, portfolio management, and most recently as part of our wealth management program. I hope those that are carrying over from the prior call had a chance to hear from Brian Olson. He and I work very closely together on that program. I'm excited today, to talk about long-term investing and, hear from you on the technical analysis side.
Yeah, of course. Like Casey mentioned, I will focus more on the price trends, and Casey will focus more on fundamental analysis as we make our way through the session today. And before we get started, let's cover some of those important disclosures here. So this material that we're going to cover today is for general informational and educational purposes only. None of this should be considered any type of recommendation or personalized investment advice. Now, we are also not recommending the use of technical analysis as the sole means of investment research. Like we said, we'll go through a little bit of both today. Now, before we head into our agenda for our session today, I just want to show where you can possibly find some of the previously recorded sessions and upcoming recorded sessions that may be archived to our channel here. So our channel is Trader Talk Schwab Coaching Webcast. Definitely take that chance to hit that subscribe button. Feel free to like this video today if you found it useful as well. On our channel, if you come here, we're on the home page. If you click on playlists, this is where those archived webcasts from today will be. So if you like something you saw, want to review some of the material, it'll be found right here up at the top, right next to our new to investing playlist as well. So if you are new to investing or someone you know is a beginner investor, you have a few different resources in your tool belt today. Now, kicking it back to our agenda for today, we're going to start by building the foundation. We're going to talk about a review of diversification, allocation, and the role of stocks in a portfolio. Then we're going to go into evaluating some opportunities. We're going to talk about cheap stocks versus value stocks. We're going to talk about pockets of relative strength and what leadership can ultimately tell us about these trends in the market. And then we'll finish up within Schwab.com by narrowing the field for our search. So really showing you how to vet stocks for long-term investing, giving you a sample framework for you as a long-term investor. So Casey, getting into our discussion today, let's just start with the foundation. We know a lot of investors jump straight into picking stocks, but historically, portfolio structure explains far more of the outcome that we'd be looking for here. So I guess when clients ask you what stock should I buy, what question do you normally ask them first?
I usually pause and say, what is it that you're trying to accomplish? What we often find is what you just noted. Clients are very interested in talking about a individual stock. They love the story. They want to dive into what are the potentials going forward. Often trying to slow that down just to take a moment and think more about what does it mean for you as the investor. And the reason that is important is what you just talked about a moment ago. Asset allocation is one of the most important parts of building a portfolio. Individual stocks will be the foundational lift that'll build out that asset allocation, but we want to make sure that we have a clear delineation of how much we have in each of those different asset classes. So goals, time horizon, your risk tolerance. If you have only a year until you're going to need the money, that stock selection is very different than if you have 10 plus years before that is needed.
Great, Casey. And how would you say diversification kind of fits into that picture when you're looking at maybe having a certain type of mix of investment objectives or having a mix of time horizons, kind of taking all of that into consideration?
Well, as you see on the slide here, the asset allocation is talking about the difference between the different asset classes and the percent that you hold in each of those. So you can think of that as a high level equities versus bonds versus cash. A lot of folks are very familiar with the 60 versus 40. What that is implying is 60% in equities, 40% in bonds. On the diversification side, we're talking about dividing out among those asset classes. So within equities, how are you diversified? Within bonds, how are you diversified? It's very important to spread our risk over various levels. So the asset allocation, well, if you go back and do the studies, I'm a bit of a nerd myself, I do a lot of reading. You'll see that tends to drive 90% of your performance expectations. So it's very important to get that part right. And then from there, we can start to talk about the diversification within each of those asset classes.
Yeah, and I'll mention too, even like within the equity space, which is just one of those asset classes, like you mentioned, Casey, there is many different ways to find diversification within that group. So investors could look for diversification in various sector trends. So that could be one of the ways, and we'll talk about that a little bit later in this segment as well. Another way could be maybe diversifying across a different market capitalization. So some cycles you may see strength in more small cap growth or smaller capitalization companies. Other times you may see strength in large capitalization companies as well, and some mid caps too. So that's just another way to diversify as well. And then another way too would be maybe looking at stocks that are more value-oriented stocks, which we'll talk about here as well, versus growth stocks too. So many different ways that you could diversify across this equity landscape.
May I ask you a question? I'd be
Yeah, of
interested to
course.
get your thoughts. Thinking about diversification relative to the idea of concentration, how does that usually show up on your side when you're looking at investment charts?
Yes, great question. So when you're looking from the technical perspective, you'll see a lot of clustering when it comes to some of these drawdowns that you're seeing in a particular sector. So let's just use for an example, the most recent kind of pullback or correction that we recently had back in February and March. There was quite a bit of drawdowns within the technology sector. We know that the technology sector is typically heavily weighted in the S&P 500, for example, the NASDAQ 100 as well. And therefore, we do have a lot of clients that do have quite a bit of exposure to tech. So when you start to see those clustering of drawdowns, and you do become concentrated in a various sector, that may put a pull on the rest of your portfolio, and you may see multiple holdings kind of breaking those trends right around the same time because they're all kind of tied to that one theme or one sector. So that's just kind of the hidden risk that you may see within possibly a portfolio. So it's definitely something to kind of keep in mind as you are constructing and rebalancing your portfolio.
Great. Yeah, I like to think that the diversification is the goal is to try to minimize the damage from any wrong idea. Like one thing, you don't want to take that to derail the future of your financial plan.
Definitely. And I think that kind of speaks to how investors kind of go about their process with maybe rebalancing their portfolio, reviewing their portfolio periodically. Because when you do have these times in the market where maybe a certain section or theme of your portfolio has become so concentrated because of a strong trend to the upside, or maybe is breaking some trends and having some drawdown to the upside or to the downside, this could give investors more of a chance to make some of those rebalancing decisions. So, from your perspective, Casey, how frequently do you typically see clients rebalance their portfolios or review their portfolios on a periodic basis?
It's a great question, and you know, again, I think this is a very important part before you really start to get into the individual investment selection. Is just trying to think about how am I going to manage my portfolio over time. So rebalancing is oftentimes having a target allocation in mind. So we need to know exactly what we're trying to position our portfolio at. I mentioned before the classic moderate investor is often defined as the 60/40. Well, over time, as markets will have varying degrees of performance, those percentages will change. So you will see, most recently, we've had this circumstance as equity markets have had a very strong period since 2019. It's been, really, for the most part, a one-way train. Well, what that means is that if you were a 60/40 back in 2019 and have not rebalanced, today it's more like an 80/20, just given market changes. And so that, and I know Brian Olson talked about this on the previous call, you're now in a position that you may not have chosen if you were starting today. And so it's all about starting today. So you are now at that 80/20. That would be an example where you may want to consider pulling back on your equity risk and favoring to fixed income in the idea that your target was that 60/40. I think this is one of the biggest things that I'm talking about with our clients right now as we go out to events. Where markets are currently, you have that opportunity. It's something that in the last couple of months, we've seen some volatility around the war in Iran. Well, that is a point oftentimes when people are very focused on their investments because things are going down. Now we have seen markets reaching all-time new highs. And so if you were uncomfortable a few weeks ago, I would take this opportunity to reconsider what your risk allocation is because markets are at these elevated levels.
Very good point there, Casey. Now, I know we're covering a lot of these questions throughout our discussion today that we've received prior to this. Since we don't have a live chat today, we wanted to incorporate a lot of your guys' questions into the discussion today. And one of the other questions that we both saw, Casey, is that the question of, hey, should I use ETFs instead of just picking stocks? So, Casey, how do you generally think about that decision when it comes to a portfolio?
Yeah, it's a great point. There you have so many choices these days. One of the best parts about what I will say Charles Schwab as a company has done over the last 50 years and what we're celebrating today is democratizing investing for the masses, meaning bringing so many investment choices to everyone out there. ETFs are one of those examples. So exchange traded funds, it's a pooled vehicle. You're bringing together investments from various investors and bringing it into one single portfolio that can be managed for certain goals. So you can have ETFs that are dedicated to investing in equities or fixed income or commodities, more recently into cryptocurrencies. And there's a lot of different options out there. You think about building out the asset allocation. We want to think about the core and explore concept, where the core can be these very well diversified ETFs or mutual funds, whereas the complementary features may be individual stocks. And because of the additional risks that come from individual stocks, that's why we like that combination. And so you can think about the idea of filling in the gaps in your portfolio with individual stocks. And we'll talk more, I know, about all the ways that you can think about doing that.
Of course. So let's kind of move to the next one and talk about another subject, the cheap versus value concepts. And so this is another big theme when it comes to investing. So how do I know if a stock is cheap or just getting cheaper? So how do you explain that difference to folks that may be new to this concept with investing?
Right. Value investing is always something that we hear about. People always want to make sure they're buying something for a good price, but there is a very fine line between cheap versus value. I give the example here of, if you're going to a car lot and you're looking for a vehicle, if you walk up and see one that is an incredible price, yeah, well, if that car has a big dent in the door, one of the tires is flat, and it doesn't exactly start on the first go, that would be something that we would consider as potentially cheap. Doesn't exactly have all of the things that you would like to see in that vehicle. Whereas a price that is low for a very good product, one that has all of their doors and tires and engine, may be a better opportunity. So that's how I like to think about cheap versus value. They are very separate things, price versus price relative to a company's fundamentals.
That's a great way of looking at it. And I'll kind of share the technical perspective too. And we'll cover more of the fundamentals and the technicals later in this, but just kind of a reminder that the fundamentals, which Casey is talking about here, is definitely more focused on the what for investing. So do the financials look healthy to invest in this company? The technicals, from the technical perspective, are more at asking the question of when. When do I possibly invest in this position? When do I possibly add to this position? Where may I reduce some of this position? So technical analysis kind of answers some of those questions. And so from a technical perspective, if we are seeing a stock that is getting weaker and weaker from a price perspective, that may be a stock that is in a long, prolonged downtrend. And so from a technical perspective, we may want as investors to look for a little bit more repair to take place, because the number one thing we want the stock to do in that case is to stop going down. So it doesn't necessarily have to start going up in that case, but the first thing it needs to do is stop going down. And so one of the easiest ways, and we'll kind of talk about that later in this, is maybe looking at simple measures of trend, maybe a 200-day moving average. If a stock is trading below its 200-day moving average or its 9-month average of price, that may be telling you that that stock is pretty cheap, but it may tell you that that stock needs a little bit more technical repair that needs to take place underway within the price as well.
Great point. I just want to call out, I think this is exactly why, we have these two parts that we're noting today. It's not just one or the other, it is a combination of both. So the fundamentals are very important to understand within a company, why it is that they have been performing well, why you have a positive view on what the future may hold, and then to take a look at the price itself. How is that trending over time? What are the technical indicators that may suggest this is the moment that you want to take another look at it. So I think that is a fantastic combination. And again, that's why we're both here.
Yeah, of course. Well, and we'll plug that more into the screener in a few minutes. But Casey, let's get into a little bit of relative strength, because we can use this in our investment process as well. And essentially what relative strength is going to allow us to do is it's going to allow us to compare maybe an asset's performance or a stock's performance compared to a benchmark, for example, maybe the S&P 500 in that case, or maybe it's comparing that individual stock to its sector to find leadership within that sector too. So one thing we want to be cognizant of as well with relative strength is also looking at the flip side of that and seeing relative weakness in that trend as well. So stocks that have more of a weakening relative strength, maybe losing momentum in their trend, or maybe facing some of these more company-specific pressures from a fundamental side. So there's multiple ways to look for relative strength within both of our platforms, both Thinkorswim and Schwab.com. So relative strength can help really look for pockets that may produce some resilience or outperformance, or even identifying weakness or underperformance. So how do you tend to look at relative strength when it comes from a portfolio perspective, Casey?
Again, I think this is where you think about the entry point. One of the most important parts of investing is when you enter and when you exit. I often try to point people to think beyond just that moment of excitement and enthusiasm for an individual stock, and really try to develop a strategy that you want to do before the emotion starts to come into play. Because what happens is once you're into the stock, now you're committed to it. And there's a lot of behavioral aspects to this. That'll be for another webcast. But we can talk about the idea that your starting point and your end point is what is going to determine what your success is in any individual position. And relative strength and technical analysis, I think, is a great way to think about an entry point. My question for you would be, what is the common misconceptions that folks have when it comes to relative strength indicators or moving averages?
Yeah, so I know a lot of technical investors and even traders will use some of these technical indicators. So moving averages, it would be one of them. So a lot of investors may use moving averages, let's say like that previous example, a 200-day moving average. That may give layers of, let's say, maybe support or resistance, and maybe it gives some technical traders a little bit more of some types of signals there. So that's probably kind of one of the context tools that investors can use, not necessarily taking everything as a straightforward instruction, but taking it from a look of, hey, this is what the trend has been for this stock over the last 9 months or so. How is that trajectory changing over time with the ever evolving fundamentals? And you mentioned the other indicator as well, maybe relative strength, or maybe even a common one that I know traders or investors tend to use, which is the relative strength index, which is that RSI that you see. That is essentially comparing not that stock to a benchmark, but it's actually comparing that stock to itself over a period of time, is saying that, hey, this stock has risen too much too quickly over this short period of time, typically 14 periods or 14 days, or it's fallen too quickly over this period of time compared to its relative trend. And so a lot of misconceptions would be to use these as possible, let's say, triggers of telling us when to get in, when to get out, when sometimes when a stock is showing relative strength versus a benchmark or itself, it may actually show that relative strength for protracted periods of time. Same with the weakness side of that too. So just because a stock has crossed a moving average, or let's say just because a stock has moved above its 70 overbought level on the RSI, or moved below its 30 oversold level on the RSI, doesn't necessarily give it a trading trigger or in itself, essentially.
That's a great point. I'll call out the bottom bullet on this slide. No individual indicator is exactly a forecast. And so I think as you just pointed out, there are several things that you can be looking at in any individual stock. I know many folks are probably on social media or hear things in the news. I often see these posts love to call out this one single topic or one single indicator that is showing X, Y, Z, and why it is likely to have future value or performance. It is not ever about one thing. We like to use the term mosaic. It is a mosaic. It is a combination of many of these factors. That's why we have the fundamentals. That's why we have the technical analysis. No one thing is going to give you that guarantee that the future is going to be bright. So I love that point.
Yeah, and I like that you mentioned that as well. There is not one specific factor, one indicator specifically. I would say from that technical perspective, the main foundation of technical analysis is that price is that number one indicator. So all of these different indicators that you are using within technical analysis actually come secondary to that number one indicator itself from a technical perspective, which is price. So let's move and pivot to a little bit of more of the diversification concept that we talked a little bit earlier, Casey, when it comes to sectors. And we know that as we invest in the market, there are going to be different cycles from a financial cycle perspective to a business cycle perspective. And so when we go through different phases of a market cycle, we are going to see maybe outperformance or underperformance in various areas of the market. And so I think maybe just kind of speak to what you're seeing when it comes from a cyclical perspective of how investors typically use sectors as part of their diversification strategy.
Yeah, this is a very critical thing to be aware of when you're thinking about any individual stock. And so let me just talk about this for a moment. When it comes to investing, I mentioned before, there's a lot of different investment vehicles out there. There's a lot of different investment stocks that are out there. And what that means is we need a way of grouping these so that we can have a better sense of how they tend to move together. So within the equity market, we have chosen to divide it out into 11 different sectors. And the ones you see here are the ones that are part of the US large cap index. And you'll see across these, each of them have a number of different companies that fall beneath them. And the goal is to try to find some relationship that is similar. What I'll say is that's not always exactly the case. The one that I love recently is within industrials, you will find Uber in the top 10 positions. I don't think a lot of people would have expected that when you're looking at that sector. But as part of a sector, it has a tendency to move in similar fashion as the economy and as you know the time passes. We often call those either cyclicals or defensive, and it really depends on what's going on in the economy. I'll note a couple. So for instance, utilities stands out. I also would note healthcare stands out, and staples as some of the more defensive categories. And the reason for that is no matter what is going on in the economy, you will continue to pay your utility bill, you will continue to go to the store, and you'll continue to have medical needs. And so those are what we would describe as enduring throughout an economic cycle. Those are more of the defensive types versus your cyclical. So spending on discretionary consumer needs or technology, energy can have a swing as the economy changes. Those are some of the big macro influences that you'll have by sector. And then again, within each sector, it doesn't mean that it's guaranteed every stock will move one for one, but this is our attempt at trying to bucket it, helping us have some framing because there's so many different stocks out there. It's a good starting point. How do you think about sectors when it comes to technical analysis?
Yeah, so I actually think about sectors in a relative strength perspective, actually. So, kind of pairing what we talked about just previously on the last slide there, Casey, because when you start to see relative strength from a sector perspective, you can also like often see some of that leadership changing before these sectors kind of show up on the leaderboards from an absolute performance perspective. So I think a lot of times relative strength within a particular sector can give us early clues about the leadership within the next portion of the cycle. One example of this was actually back in December, November and December, actually, where the energy sector was actually showing improving relative strength versus the overall S&P 500. And it was giving us a little bit of clues to show us that, hey, money may be rotating to this sector on this shorter term basis. But then when we had that breakout in absolute performance, we saw that energy was actually in the first quarter of the year the number one outperformer from an absolute basis as well. So those trends in relative strength can definitely give us some of those early clues to some of these sectors that may lead on an absolute performance scale as well.
And the other thing that I'll note as you're thinking about sector investing, they are not all built the same. I talked about some of the differences in companies. They're also not the same size. So even though we have divided this here into just the 11 sectors, each of them does not have the same weight within the S&P 500. For instance, you'll find a high concentration in things like technology or communication services, whereas energy is only a few percentage points in the total index. So it's important to keep in mind, that concentration that you have at just the entire sector level as well.
Yeah, I think that you bring up a good point as well. And there's also one of these sectors, industrials, that actually has had the highest correlation to the S&P 500 over time, actually. So there's a lot of different important things to know about various sectors as you do approach investing. So this we'll kind of get into this now as we move towards our putting our research process together and diving into Schwab.com to take a look at some of these sector trends, some of the research that we provide you as investors here at Schwab, and how we can take some of that research and build it into an example framework for vetting some of these stocks for long-term investing. So I'm going to pull up Schwab.com here, and this is going to be kind of an area where we may want to start. So if you go navigate to the research tab at the very, very top of your screen, once you're logged into Schwab.com, click on US markets. Now, on this page, you will get a high level overview of what is going on in the market currently. You may see the news, maybe any analyst upgrades, downgrades, maybe calendar of events, things like that. But one of the things that you can actually use on this page is this sectors and industries tool. And you'll notice that at the bottom, it has a show more button here. So I'm going to actually click on that, Casey, and that's going to pull up our sectors and industry page, which will actually give us a great description of a mix of things here. So I'm going to, for those of you that haven't seen this page before, you have a performance tab and you have a valuation tab. So this will kind of give you some of the fundamentals as it pertains to some of these sectors, but it'll also give you the performance of various sectors and the S&P 500 over these various periods of time. And then one of the things that investors may actually find useful here is these Schwab sector views in this column to the left here. So Casey, how can investors possibly use Schwab sector views as part of their research process?
Well, I'm glad you called it out. I'm very happy that you noted this. Mainly, as I said in the beginning, I work with the Schwab Wealth Advisory Group, but I am a part of the Schwab Center for Financial Research that is developing these views. So I'm glad to hear that they are useful. What we're calling out here, we get together every single month. We are talking about what's going on in markets. We are reviewing the fundamentals of each of these sectors, and we are putting together our views that you can see on that page. And so what you'll see is that we have a span from least to most favorable. And what Rachel is clicking on is the dedicated page that we have for our views. And we're going to define exactly what we're seeing in each of those sectors. Most recently, I mentioned a moment ago, industrials and healthcare. Those are ones that we have on the most favored side of things. A lot of those trends are around the AI themes that we're seeing and the build out that is happening, within data centers and beyond. Whereas in other places like consumer discretionary, as inflation and some of the declining wages, or at least less growth in wages, have shown some challenges in those spaces, we have a least or less favored position there. So again, we offer that as a simple guideline of how we're thinking about sectors. Hopefully it's useful as a way to try to narrow down some of this decision making.
Yeah, I think this is great that you guys brought back some of these sector views. I love the research that your group has placed into here that's available for us as self-directed investors to actually get a good perspective on what Schwab's view is from both the fundamental side, maybe the technical side as well, and how we can use that as part of our process. So I think we'll kind of take some of those things that you mentioned, maybe some of those views where we have a little bit more favorable tilt towards a couple sectors, like you mentioned, like healthcare, industrials, materials, communication services. Let's start there with our screener and then start and build some fundamental and technical criteria. So the next step we're going to go through is if we go to the research tab here, you'll notice under research tools, we have stocks as well as some of those other asset classes or other types of investment products that we discussed earlier. But we're just going to stick with the stock screener this time. So you'll notice on the page, stock screener is the first tool that actually pops up here. So we're going to click on that one as well. And let's just start this screener, Casey, with some of the basic criteria that we kind of already discussed. So one of the things that we already talked about was looking at various sectors where we may have a more favorable tilt towards some of those from a fundamental and technical perspective. So if we want to open up the basic criteria, click on sectors and industries, this section will populate to the right-hand side or kind of in the middle of the screen here. And all we need to do is click on communication services, healthcare, industrials, and materials within this group. And so that's essentially going to narrow our search from all stocks to just focusing on these specific sectors. Now, one of the other things that we may take a look at as well is maybe some Schwab equity ratings as well. Casey, I know your group works on that model for Schwab equity ratings. Can you maybe speak a little bit more to what that is and how investors can use that in their process as well?
Of course, and I love it looking at this screener. Right, you can see the 5,600 stocks. It just points to the value of a screener like this. Very difficult to try to consider how vast your opportunity set is in equities. So this is a great way to try to narrow that down. The Schwab Equity Ratings. This is another resource that is available from the Schwab team here. What we're doing is bringing together all of the data points and sentiment and price indicators that we believe to be predictive of future returns over the next 12 months. And so the idea is to rank this entire universe. So we're going to go through and have the full, what we use the Russell 3000s or 3,000 different stocks that are out there that have a potential rating, and categorize them based off of some of the fundamentals that we talked about, some of the technicals that we talked about, as well as sentiment, and give them a letter grade. And so in our view, the A and B rated stocks tend to have a higher probability of outperforming going forward. So that we really find this as, again, another way to try to simplify some of the different criteria that are available to you. But if you're just looking for a one-stop shop, this is something that we've already done. We've done decades of research to come up with the methodology behind this rating system, and we offer it very simply in an A, B outcome. It's a beautiful thing.
I think it's perfect. It takes me back to grade school when we would just look for A's and B's. If I got anything of a C or lower, I was in trouble. So we stuck with the A's and B's to try to stick to honor roll. So I think A's and
Good.
B's would be possibly something to add to an example screener here. And that's again found under analyst ratings. Now, the other thing is we'll also show when we narrow down these results, we'll actually show you how to access some of these Schwab equity ratings as well. It's going to be on the stock profile page. So when you click on a stock, with the rest of the reports and ratings that populate, you'll see Schwab equity ratings there as well. And like Casey said, it is a model-based approach, so many different factors that drive it, and there will be links to some of the foundations and the model on that page as well. So let's get into a couple of the technicals here. So maybe some of those filters that may narrow things down a little bit more. Oh, I guess there's one other one that we forgot to add just from the basic criteria was market capitalization. So this is going to give us the size of a company. Now, larger cap companies have a lot more cash flow. In inflationary environments, they may be a little bit more sustainable than maybe something like small capitalization companies that are maybe higher growth, a little bit more risk, carry a little bit more debt. So we're going to go with a large cap here. That's going to narrow our search a little bit as well. And then from a technical perspective, some investors may look for average volume. Now, if we're already looking at some of the largest companies out there, there may already be a level of liquidity. But from a technical perspective, we may look at a stock that is pretty liquid. It has an average volume of over 1 million shares traded in a given day. And then if we look down here below at the technicals, we talked about that 200-day simple moving average. Let's look at stocks that may have just crossed that simple moving average. So maybe stocks that have had that repair that we were talking about earlier that may already be underway, meaning that the stock has stopped going down and now it's starting to move up in a longer term uptrend. So we're going to filter that to just above. And would you look at that, Casey? We took a universe of over 5,000 stocks that we started with, and it actually narrowed our search down to 3 matches with just some of this basic criteria that we actually talked about here. So I'm going to click on View 3 matches, and let's take a look at the results. So we have 3 different results here. And as we talked about before, you can click on one of these results. It will take you to the stock profile page. Another thing that you could do here on this screen, if you wanted to narrow your results a little bit further, let's say this watch list that you created yielded, let's say 20 different results or 30 different results. You could take an example of a couple of these together and compare their fundamentals and their technicals all on one screen. Now you could do this up with 5 particular symbols. So I'm going to select all 3 here and I'm going to click compare up to 5. And this is going to take me to that stock compare screen here. Now, you're going to be able to compare many different things. So the relative performance, like what we talked about. So what are these stocks performing like versus the S&P 500 on these different time frames? So depending on your time frame as an investor, you can change the time frame of the chart. Same thing that you would do with looking at an individual stock. You'd get some of the summary details, the fundamentals here that Casey tends to focus on a little bit more, and then our Schwab equity ratings here as Casey. We went through a ton of information today for our investors. We looked at just kind of where to build with the building blocks of a portfolio and its considerations. So we talked about asset allocation, we talked about diversification, then we got into some of the concepts of cheap versus value, relative strength, fundamental and technical analysis, and then you helped me put it all together here on Schwab.com, utilizing some of our research tools, using some of the education that we provide our clients as well through Schwab Equity Rating, Schwab Sector Views, and just the screener tool in general to really give an example framework of how you could narrow down this process and truly vet stocks for long-term investing. So this was fun.
It was fantastic. I appreciate you having me on. The one thing that I'll just close with from my side, investing is incredibly personal. We talk about this often with our clients that are in the Schwab Wealth Advisory program. Personalization is more important than anything. And I want to make sure that when folks are thinking about individual stocks, if someone is telling you about an individual stock or something that has worked very well, that may be great for them, but it may not be right for you. So it's very important to consider your own goals, your time horizon, what your tolerance is for risk whenever you're putting together this picture. It is the mosaic. It is not one answer that fits all. Make sure that it is right for you.
Awesome, Casey. It was a pleasure to have you join me today on Schwab Coaching for National Investing Day. I want to show the folks for one last time where they can find today's session archived to our channel in case they want to go back later and rewatch this segment as well and take advantage of some of the research tools that we have here at Schwab. Just a reminder that this session, as well as the others today through National Investing Day, will be archived to our YouTube channel, Trader Talks at Schwab Coaching. Please feel free to subscribe to this channel. We have webcasts all day, every day. And if you go to the playlist section here, our talks today will actually be archived under this playlist for National Investing Day, right next to the new to investing. So if you're new to investing as well, or you have friends, colleagues, family members that may be new to investing, please feel free to share these webcasts and playlists with them as well. So thank you again, Casey, and thank you for everyone that is at home watching. We appreciate all the questions that you submitted to us to make this day very worthwhile for you guys in learning about how to vet stocks for long-term investing. So we'll see you later, and stay tuned for our next show coming up here at 1 p.m. Eastern Time.